Now, the next management we are speaking with is GPT Healthcare. The stock has been buzzing in trade. I was just mentioning that the stock actually today, this morning, is up about 6.5%. Let's talk about the business, occupancy, average revenue per bed, and other matrices. We are now joined by Mr. Atul Tantia, Group Chief Financial Officer at GPT Healthcare. Atul, good morning. Great to have you with us here. Thanks very much for your time. Prashant this side. Could you talk to us a little bit about how this particular quarter is panning out like? I think growth did slow down a little bit in the last quarter. We saw, I think, a bit of a decline on a quarter-on-quarter basis. What's the fourth quarter panning out like?
So the third quarter is typically a seasonally weak quarter due to the festival season. And this in 2024, the Navratri or Durga Puja in Calcutta, the West Bengal side, was in October rather than September, which was in last year in FY23. So on a comparable basis, it is not a good comparison. Despite that, we have grown about 4.5% in Q3. Q4, we expect to grow north of 10. Expect to grow about 10 to 15%. For the full year, we expect to exceed revenue by almost 400 crores.
So, if you exceed revenue by 400 crores for the full year, what would that mean in terms of growth for FY25? If you extrapolated, what kind of growth are you looking at for FY25?
So FY25, we expect revenue growth to be in the range of about 15 to 18%.
Okay, so 15 to 18% growth is what you're looking at in FY25. Your Salt Lake Hospital and the Dum Dum Hospital have seen a fall in occupancies. I just want to understand, what was the reason for that? Of course, you mentioned some of them, but going forward as well, do you continue to see this kind of pressure?
So Salt Lake, honestly, we have commissioned a surgical robot. That surgical robot has led to good usage. We've done more than 300 surgeries from that surgical robot. If you see our ALOS or average length of stay has also fallen in Salt Lake to around 3 days compared to 4 days earlier. This leads to a lot of beds getting freed up, and we are looking at adding more specialties in the Salt Lake Hospital. We've added some gastroenterology beds as well recently in order to fill those beds up. With regard to Dum Dum, the occupancy has been around the 80% mark. The full year last year was about 82%. Even the 9 months has been around 78%. So anyways, occupancy north of 75% is a good number for any mature hospital, and we expect Dum Dum to maintain north of 75-77%.
All right. Hi, Atul. Good morning and good to see you. And Nigel on this side. Your ARPOB, I think, is in that early 30,000 odd mark, 33,000 if I'm not mistaken. How do you see this number pan out? Point number one. Point number two is, there is talk of some standardization of rates. How do you see this? What is your view on this? And do you think there could be some kind of middle ground that you all can come to?
Sure. So with respect to our ARPOB, it is around the 32,500 mark. It is a conscious call of the management to address this strata of the society, which is an aspiring population, has high disposable income, basically the middle to high income part of the society. We consciously keep our ARPOB around that mark, and we expect it to grow by almost 5 to 6% going forward due to inflation as well as change in specialty mix, etc. With respect to the standardization of rates, I think that we, as an industry, the industry body is taking a call as to what it should be. The industry is in talks with the Union Health Department as well as the various state departments to ensure that the returns on the investments are also met. We expect the government to take a conscious call due to the high investment that the industry does in this sector.
Okay, all right. And what about, if I had to give us a margin number, you're talking about growing by 15 to 18% on a base of around 400 crores approximately. So you'll be in excess of around 500 crores in the coming year. But what does it mean in terms of margins?
Sure. So A doesn't mean that we'll be in excess of 500, we'll be shy of 500. In terms of at EBITDA level, we are around the 22.7% mark for the 9 months. We expect EBITDA to be around the 23.5% going forward as well. Having said that, in FY25, we expect to commission our Raipur hospital. So the first couple of quarters for the Raipur hospital will be a negative quarter because of the initial losses. So that might lead to a slight dip in the EBITDA margin. But our other mature hospitals will kind of make that up.
So you have plans to open 150 to 200 bedded hospitals in some of the underserved markets. And as you said, your Raipur hospital will also be commissioned in Q4 of FY25. What does this mean in terms of your capex? How much are you going to be investing for these to increase the bed capacity? How would that be funded? Would that put some pressure on your balance sheet?
So post the IPO, we have a gross debt of almost 8 crores. We have used the IPO proceeds to repay the debt. So we are hardly in debt on the balance sheet. We have almost 45 crores sitting on the balance sheet as cash and investments to fund our growth. We have a very strong cash flow to EBITDA conversion being north of 80% due to our payer mix. And this leads to us being very comfortable in terms of our growth opportunities. The Raipur hospital is on an asset-light model, so we'll be funding it mostly through internal accruals, and we'll spend around 55 crores to fund that hospital.
Okay, all right. Good speaking to you, Atul. Thanks so much for stopping by and filling us in with all of those details. Wishing you all the best in the coming year. Things look up, going by your guidance, whether it's with regard to the average revenue per bed, the revenue growth, the margins as well. All of those factors looking up. For the time being, the street likes the numbers, and it seems they like what you said as well. The stock is up closer on 6.5%.